Good afternoon, sir.
Yo, yo, yo. This is the Beef and Bitcoin podcast, episode 56, with your host, Brett and CH. Today's topics looks like SimSwap attacks are back in the forefront. We'll talk about that and how to protect yourself. We also have some new DeFi scams that are popping back up, and from our good friend Julian Hosp, who ex-co-founder of 10x, who dumped his bags on all the people that he scammed, and he's back again. So we'll talk about that and speculate a little bit on the future of those DeFi scams. And then finally, it looks like in the your traditional equity markets, insiders are dumping from recent IPOs. Looks like they might be out of lockup and have been dumping on retail. So we'll talk about that and the correlation between some of the crypto scams and dumping that we've seen in the past, and then I guess I'd call it legalized dumping from the equity markets. But other than that, how you doing this week, man?
Doing good. Again, things I know in the macro sense, you were talking about it already the other day, is Hong Kong, but it's hitting new levels now. I think we've just been talking about it before, basically, and I don't even bring it up, but it's kind of important. This has been going on for 6 months. Hong Kong is This is huge because whatever we're seeing here is the cusp of what's going on everywhere, and the way Hong Kong's playing in now is it's basically total war there now. They're throwing petro bombs, which is Molotov cocktails, using arrows, using like medieval slings we've seen, like
Medieval methods, I guess you
yeah,
could say.
catapults, I guess would be the correct term. Yeah, so it's just something to keep in mind. I don't know, because it's definitely playing in. It's amping up. I think we exchanged that zero hedge tweet earlier, that headline or whatever.
Mm-hmm.
So
Yeah, no, it's that in one kind of image picture is what's going on globally, and it's I guess fantastic to be in the United States and not have to deal with that kind of thing, but also um, it's easy to not know about it. But I guess that's kind of why we bring it up when it's happening, because it's important to keep those things in mind in the back of your mind when thinking about Bitcoin and global macro and just all this stuff.
yeah, it's all it all ties in together here, and just jumping into this SIM swapper thing. So basically, the FBI um, took in two Massachusetts residents Thursday on charges of attempting to steal cryptocurrency and hijack social media accounts from individuals by SIM swapping their phones. People know what that is. There's SIM cards in your phones. I think most people know that now because everyone who gets a smartphone, unless someone does it for them, has to, if they get a new one, you have to change your SIM out or whatever. So I
Right.
think most people are pretty familiar with what that is now.
Yeah, that's it was interesting to see this. It looks like it was a preemptive arrest. So they were planning to steal, I don't know, $500,000 worth of various cryptocurrencies from their targets' phones, and we've seen that in the past. I don't remember if we've covered it. I'm pretty sure we have, but
Yeah, at some
a
point.
lot of a lot of high profile crypto related people has been sim swapped over the years and had millions taken from them. And there's even been a few instances where um, these people who've gotten hacked have sued the telephone companies and the cell phone providers like AT&T, because their security practices were just trash. So pretty much the way I understand the hack is you can you call up and say, hey, this is you know crypto humor. I fucking lost my phone or whatever. I need you to send me a new SIM card or send me the text message so I can access the phone. Then they restore the phone. They log into your Coinbase account and then just drain your funds from there. And it's as long as you have the answers to the security questions, um, you can kind of do this hack. So you don't have to physically go into the store, show them an ID, say, "Hey, this is me. Help me restore my phone or give me a new one or replace my SIM card." So the I hate to see this happen, but on the other hand, the people who get targeted should really know better than to leave I mean, we're talking half a million, a quarter of a million, half a million, millions of dollars worth of crypto on your phone on the exchange that you can access. It's just, I know we talk about not your keys, not your Bitcoin all the time, but every time I see this, I always want to make it a topic for the podcast because it keeps happening. So I have a feeling that at least one of our listeners might have a significant portion of their crypto holdings on their phone, and it's just a big no-no and a good incentive um, to learn how to hold your own keys, use a hardware wallet. I mean, just the basic stuff. But I wanted to get your take on it.
Yeah, no, that's a very smart thing. You see it posted quite often in crypto. People are like, don't hold like. I've seen a couple guys, like especially like some traders. I think it was Thrillmax, or I can't think of it. Thinking USD, I think it was. Uh, he posted something about like like your risk. Like if just because you have money in the exchange doesn't mean it's yours. And he was saying like people a lot of times will have a shit ton of money in exchange and think they're this worth this much, and then boom, that exchange something happens to the exchange, they can't get the funds out. And he taught, he mentioned it was a tweet. I'm just paraphrasing off what I remember basically, but it was along the lines of like know your risk on the exchange. And I've seen a few traders post this, like if just because you have like a couple hundred grand in Bitcoin on BitMEX doesn't mean you actually have that money. You know what I mean? Or just because you have it on Binance or just because you have it on Bitstamp, it doesn't matter. You know what I mean? It's that's what know your risk. If just because you have it like, and that's why some people, this isn't safer, but if you have it not just all on one exchange and you have through a few different exchanges, your risk is spread out versus all in one spot, and thus
Yeah.
with having it in like a Ledger Nano S or Trezor hardware wallet.
No, I think that's a really good point. It's a really good point. It's a good incentive for the to kind of diversify that risk, right? Spread it around a little bit. Um, while I definitely don't want to see people leaving their coins on the exchange, I do understand that some of the non-technical. Let me see how I can phrase this. There might be a higher probability of you losing your coins if you don't leave them on the exchange. So, in other words, you're non-technical or really not paying attention. You write down your recovery phrase incorrectly. You move your coins on your hardware wallet. You're really not good about keeping your hardware wallet up to date or making sure you understand what you're doing. You lose your recovery seed or you wrote it down wrong. And then boom, next thing you know, you lost all your Bitcoin. And I understand that's definitely a risk. And that also goes to show how early it is from just a technology standpoint. Like that's a huge risk for a non-technical person. Whereas you and I, who were kind of got into the space in the bull run of 2017, that was really nailed down. Like, don't leave your shit on the exchange.
Yeah.
Make sure you use a hardware wallet. So there's still a group of people who came in after the fact who aren't tech.
I was just. Did you remember like how expensive hardware wallets got at one point? It was
Oh yeah,
ridiculous. You
dude,
couldn't get them.
yeah,
You couldn't get
they
Ledger
were
Nano
they were
S's for like a
back
while.
ordered. I
You couldn't
remember.
get shit, and it was like
I remember pre-ordering like the Trezor Model T and waiting for the Ledger to come in the mail and all this stuff. And we were doing like video reviews for all the hardware wallets. I mean, it was nuts. But on the other hand, you have an entire group of people who maybe using a hardware wallet is more dangerous for their crypto holdings than leaving it on the exchange. And like it's hard because we're still in that middle ground, and always there's a best practice, like don't leave your shit on the exchange. You really need to know better, especially if you have significant exposure to this. But I think, and Trace Mayer always talks about this, where he'll big dick whoever he's on an interview with and just be like, you know what, that's your fault if you can't figure out how to use your hardware wallet or run a full node. Like if you're gonna take the time to invest in the space, like learn it. It is 100% worth it to learn and pays huge dividends. Right. Yeah. Like I agree with what Trace is saying.
we're
Sorry, I
still.
lost you there for a second.
I was just gonna let you run from there.
No, yeah. It like when Trace usually speaks, I listen and I can be sympathetic and empathetic to the non-technical people who maybe shouldn't be holding their own keys, but I also like his approach of, if you're going to invest even $1 into this, like it is 100% worth the time to invest in yourself and learn how to use these tools, because these will be just tools of the future that everyone will use. And two-factor authentication and managing keys, I don't think it is too out of the ordinary to do a lot of that stuff. So it's always going to be worth investing in yourself to learn this shit.
Oh yeah, 100%. It's definitely worth knowing. If you're gonna get into it, know how to use it. That's that simple.
Right.
Understand how it works. Understand, how to send money, or send crypto, I should say, or Bitcoin. Um, Once you get that, even just basics of doing that, it'll kind of open you up. Go through block explorers, understand what a block explorer is.
Right.
Just basics.
The
Um,
light bulb really goes off that first time you do your own kind of transaction and you physically hit the button on your hardware wallet and like confirm it.
it's pretty cool. No, it's pretty
it
coal. And
is
then
cool. It's
it's really,
cool.
wow. This actually work. And then going through a block explorer, looking at all that stuff. I think that's always cool.
Especially if you do it on a weekend and then you're like, I can't do this with my normal bank.
Yeah.
Uh, that's always
So I clicked on this thing because we were speaking of the SIM card, and it was talking about the case of Michael Turpin getting a $75 million award, or
yeah,
75.8 in compensatory and punitive damages, which is,
it's wild.
yeah. I mean, it's a big fuck up by AT&T and whoever else was in this.
Yeah, it's a huge fuck up. But then at the same time, I can't believe this guy had $75 million
Did he have 75?
worth.
Was it
It might not have been 75,
at the
but
time of the theft?
it was in
3
the
million tokens
millions.
worth 23.8 million.
Yeah.
That
So,
makes
I
sense.
mean,
But
regardless of what it was
what
worth,
time, when did this happen again though? When
it
was the,
happened it happened a while ago.
was it during
I,
like
wa-
the bull run? If because
yeah,
okay, but
if not soon thereafter, because it was worth, 24 million at the time.
okay,
So,
yeah,
yeah.
it had to be then because that's a lot. Like,
The point is this guy had that much on the exchange, and
yeah,
this is
no,
a top, I hate to use the word crypto, but this is a top crypto person who really should know better. Like,
yeah,
uh,
no. The only thing I can think, and I'm playing like devil's advocate in his
yep,
case, was maybe he was trying to sell his shit or something, or trying to
yep,
time the top type of
that's a
thing.
good point. Yep.
That's because, like, think about it. Nobody, if it, I wonder when this happened.
No, that's a good point. So if it's peak bull market or soon thereafter and you're trying to dump your bags, there may be a situation where you have the majority of your cryptocurrency holdings on the exchange to dump. And
January 7th, 2018, dude.
there
So
you
I
go.
mean
Okay.
that makes sense. Like the top. That's like
That is
that
literally the
the
top.
top. Like wait, let's go to this. I bet you like 10x probably, or pay, or yeah, the 10x
There
token,
you
because that's
go.
our one of our next topics. That's not even far enough back. Oh, that's August 17th. That's a Bitcoin chart, but I'm sure the USD chart's different.
Yeah, most likely.
It's probably
Um, I guess we should jump
this.
into that.
Yeah, this will be.
So
Yeah.
so I saw an interesting tweet talking about how DeFi scams, and DeFi standing for decentralized finance. Just basically a really stupid Ethereum kind of term that they've kind of tried to meme into existence. And I saw a tweet about it saying how DeFi scams might be the next. I like to think about it as the next utility token scam. So utility tokens really took off in 2017 as it's a fantastic scam, right? You think, okay, we're going to build our own little circular economy here from our utility token, and you can only access the platform by having this utility token. Okay, great. It was a great scam. Everybody bought it. I bought into it. Like it sounded fantastic. And now and one of those founders was Julian Hosp from 10x, who the from what I remember of 10x, it was like a credit card where you can spend your crypto, and he was really pumping it. He was making YouTube videos about what was going on with 10x and all this stuff. And as you can see from this chart, if you're watching on YouTube, the peak of the pay Bitcoin price was in August of 2017. So that was summer of the bull run, And I mean, I trying to trade this and catch a pump, thinking, we were going to be spending crypto on credit cards and all was great in the world and I was going to love it. And I totally fell for it and it sucks. And, in 2018, Julian Haas dumped all of his tokens and exited the project. And now it looks like he is back again with something called DeFi chain, which it can't get any more scammy than that. So the reason I brought it up is just because I have a sneaking suspicion, and I want to get your take on this, that DeFi related scams will kind of be the next utility token whenever that next bull run is really starting to heat up.
It could be.
Yeah.
I mean, this is his website. I had to go to his Twitter page. So I went to his Twitter page and joined the financial revolution with me. Never forget his chart, though, if you can see this. He dumped his tokens, as Crypto Humor noted, in the end of December of 2018. I think we covered it. It was like one of our, probably within the first 10 episodes, something like that.
Yeah, I think 10. You're right.
We did talk about it, though, I remember, because it was... But, yeah, so the guy launched a shitcoin, completely dumped it, and is now moving on to co-founder of @Cake DeFi. What is Cake DeFi? I'm going to read its bio here. Building the world's first decentralized finance, #DeFi, platform on the @DeFi chain, first project of #CakePool, founded by Dr. Julian, or @Julian Haas, and Uzin, who is a blockchain architect, breeds Bitcoin, blockchain money, decentralization, and prog-rock. I don't know what that is. He's DeFi, though. Yeah, I don't know what to say.
Yeah. The reason that I wanted to bring it up is just because I'm learning about all of the past kind of altcoin bull runs and markets and scams that happened in 2013 and then 2017. And now I think as the next wave of new users comes in, the scam usually changes, right? So in 2013, to the best of my knowledge, it was all about like national coins, like fucking Aurora coin, and like all these coins for particular countries taking hold, and then you have Litecoin start to launch, and then all a name coin and blah blah blah, and then we get into 2017, and it's all utility tokens, and now DeFi is becoming a topic, especially for Ethereum land, which nothing has really come of it. But I mean, fucking Julian really seems to jump into. He's really early when it comes to scams. So and apparently from what I understand, he was big into like multi-level marketing schemes prior to getting into crypto. So like, it's just weird following him and his thought process around the easiest way for him to scam people. So I think it is interesting that his choice of scam this time around is around DeFi.
You know what? He's just picking the next wave, I guess. He's going from the MLMs to ERC20 tokens, and now finally DeFi.
Right.
Or, I guess utility tokens in his credit card. I remember that was a big deal. People thought 10x was going to actually be a thing.
Dude, for sure. I mean, it mooned big time summer of 2017. Even I was like, dude, I had gotten some. I was waiting for this credit card to come. It was like great. I couldn't wait. And then I remember, of course, I did all my due diligence after being trading like an asshole and thinking I was going to become a shitcoin millionaire. And you just start to realize how dumb a lot of these ideas were. And of course, I blame nobody but myself. I should have really known better. You kind of need to take a financial loss to have to do your research and figure out why you made a mistake. So I almost can't believe he's willing to like do it again. And I think he's willing to do it again because all the people that he scammed in 2017 still have not logged back into Binance to dump their bags. So,
but again, price drives adoption. If these things launch and make money,
exactly,
people will come. It just happens. It doesn't matter what it is.
Yep, it'll be a whole new group of people coming in that he had. Like it's easy pickings for him.
Yeah, you could have a stock or a fucking crypto with the ticker shit, and people would buy it.
Right.
People would buy
No,
it, and
dude,
if it
you're right.
moved,
You're right.
people would buy it.
No, I agree with you 100%. You're totally right. And that's and what when I look at some of the OG people who are like on Twitter who've kind of seen the multiple cycles already, and they explain this. They're like the reason that we're so hard or like against the shit coining and a lot of this other stuff because they've seen the scams happen over and over and over again. And when you have a new wave of people coming in, they have no understanding of anything that happened to prior to that bull run, right? So when I'm getting in 2017, all I knew was, Bitcoin's this old technology, Ethereum's the future, and all these, and we're going to have a token for everything. And I did absolutely zero research on anything that happened to prior spring, summer 2017. Like that was all I knew, and I just moved forward. And, like, I think Julian knows this, and there's going to be a whole new wave of new users coming in whenever price starts going nuts and everybody wants to jump back in. You can grab all of those people who will do zero research on anything that's happened from a historical standpoint, and he's gonna get them most likely. Which
Well, dude,
kind of
2017 was so long ago.
dude, it was like, why would you even look back on 2017?
I mean, like next year it's gonna be 3 years, and I'm like, oh, why would I?
Holy shit, man, it's wild.
Yeah, I just wanted to read this. This is kind of Adam Newman-ish to me, kind of like the WeWork founder who wanted to be the first trillionaire. Gee, think about his vision. We work everywhere. Like, think about it.
Yeah.
I mean, the dude's absolutely insane. But this is, you can see it if you're watching on YouTube, but the JulianHaas.com. I'm just reading from his page. My vision. There are at least 1 billion people by 2025 knowing and understanding blockchain because of me. The world is changing very fast. People are looking for more options to take care of their things themselves instead of someone else managing it for them. That is the reason why decentralization is becoming more and more important. It is my goal to explain and bring cryptocurrencies to the masses so that nobody feels afraid of that change. In my opinion, it's crucial to understand that a future we shape ourselves is nothing to be afraid of. I think he's just trying to do an Adam Newman, just fucking rake in as much money as possible.
Totally. It's just a lot of BS, and I almost can't believe this guy has the guts to put this on like a website. But
Think about it if you don't know him. Think about it.
Like you wouldn't. Why would you know that? Why would you know him at all?
He looks like such a good guy.
Just what a nice guy. Looks like a real straight shooter.
Well, here's his book.
Yeah, he wrote another book on
Blockchain.
crypto stuff, and I think that might be I forget, but there's actually a picture of like Elon Musk holding his book from 2017 or 18 or something like that. I forget. Yeah.
This one came out December 21st.
Look, by 10x co-founder. Jesus Christ. Yeah,
December 21st,
that was
2017.
probably the books. That was probably the book, yeah.
That's the first one. Blockchain 2.0 this is probably the second shitcoin guide here to tell you what to buy. March 7, 2019.
There it is. Yep. So he was getting ready to keep the scams coming. So I don't know. In summary, with this kind of stuff, I wouldn't even waste your time doing your homework on this. It's just like avoid at all costs any of this nonsense stuff. Like I don't have anything else to say about it. It just I'm still in shock that he's even around and would even dare come back into the space.
Why not?
I guess right. No, it's profitable. He's gonna do it. Like that's what it comes down to.
Yeah, it's out of 10x. Man,
I guess this is kind of a good. So we've seen ex founders dumping their scams on people, and now we see insiders from the equities markets kind of getting out of their position. So I'll let you talk a little bit about this.
Shitcoin. But here's Uber chart. You can see if you're online. But anyways, Uber it's gone from its high of $47 down to point is here we were talking about is basically insiders are dumping a shit ton of shares. Uber's the perfect example here. Uber lockup expired. I can't even say this. Kalanick. Kalanick, is that right?
Yeah, I think Kalanick sounds right.
Kalanick, yeah. Kalanick has dumped 20.3 million shares worth 547 million. Now, granted, this is after the 180-day lockup, and like he has to register to do this. Like he can't just be like, it's not like he's sitting on his fucking Schwab account clicking sell, 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 sell. So, dude, that'd be ridiculous. No, he has to register this before he does it, and I can't remember the exact code of why, but insider sellers, whether it's like board members, executive founders, etc., VC have to register prior to, like, they give like a date, and like November 8th or whatever. So, and yeah, so that's like pretty much a story for every company though right now, because insider selling's gone ridiculous. And you can see this chart for online. We are at the highest basically since 2000, when every insider was dumping all their bags because things had gotten retarded, and it was the new millennium, and they realized this wasn't going to last because everything was built on dumb accounting.
Yeah, and it's interesting you see that huge kind of pump in the year 2000, and that makes me wonder: do we see more selling in 2020? Right,
I think they have to.
We're
There's no
40 days
way.
away, and it's funny because when I'm looking at that, so I see 1999 looks like the insider selling was half of what it was in 2000, and then
Roughly.
it still took another into 2001 where you had the real .com burst. So I know we say things always take longer than we think they're going to take. So I don't wonder if 2020 is the year of massive insider selling, and then it still takes even more time after that for the I don't know. I guess recession. I don't really know how to say it because I'm wrong. I keep being wrong for the last year. I don't know. What do you think?
It doesn't matter what I think because you just said it. Like, we're going to be wrong either way. But I think you have a good point there. Like it, yeah. Well, the point of next year, I think 2020 might be the year, unless for whatever reason every executive decided to sell all of the rest of November and December. Um,
Right.
which I don't know. Maybe it's possible.
Yeah, can't put it past them.
Yeah, I
Tax
mean,
loss, selling, get out of
um,
your positions. I don't know.
yeah, but anyways, yeah, 2020 could be our year where we see quite a, and it will probably far surpass 2000 just because of inflation. It doesn't matter. Like there's no way around it. Like it'll probably far surpass it.
Yeah, I think that's kind of an interesting thing to keep an eye on, and I'm sure we'll talk about insider selling in future episodes to come as more information comes out. But when I think about this kind of stuff and maybe selling of Uber or Beyond Meat or any of the more recent IPOs, um, those are kind of like the cracks in the surface, right? Like in hindsight, you can point to them and say, "Oh, that really should have tipped me off," right? The ex-founder of Uber, dumping their shares. Like that should have been. I should have really. My ears should have perked up when I heard that. So. Again, like everything always takes longer than it should. So I'm assuming that these will be things that we can point to in hindsight and say that should have been a sign of kind of things to come.
Yeah, it's one of as you said, it's always hindsight. But the buybacks is something too that they added in here, and the whole scammy thing. This whole thing is like, it's like so they can get issued shares. Like managers get issued shares, they sit on them. Price goes up over the last how many years, and then they sell them right into buybacks. It's like it's and like when I think they were talking about Jamie Dimon, like when he like did something like heroic where he like aided something, he loaned money or did something, bought a bunch of shares with his own money, only to sell them into a buyback for a higher price. Like I don't know, like there was something along the lines of that. I read like a few weeks ago. The whole buyback thing is just it was illegal for a reason, and like the perfect example is Apple went from like over 6.5 billion shares outstanding to 4.5 billion shares outstanding in the past few years. Apple's in the process of buying themselves out.
Yeah, I mean, when I think about that, outside of the moral issues of firms being able to buy back their own shares. It's interesting that Apple would think buying back their own shares is the best use of their capital. So it tells me a couple things. One, do they think they're out of ideas where that you wouldn't want to spend that capital on R&D? Do you think that your company's worth more and you might as well buy back some of those shares because you think it's going to be worth more in the future? It's also interesting because when you think from an earnings per share standpoint, even though maybe EPS could be relatively stable or still look like it's increasing, that's not necessarily the case because the shares outstanding is decreasing because of those buybacks. So you can think that the performance of the asset that you're buying is fine and doing better, but it's actually not if you were to back out those the buybacks of those shares.
Yeah, no, that's what it's financialization of our markets. It's finding ways to make numbers look better and not actually improve products, improve service, etc. That's what it's become. The managers of companies, the CEOs, etc., CFO, they don't have an, or you can go down the list of executives, and even board members don't have an incentive to improve their product. They have an incentive to hit numbers. That's all that matters.
Right. And I think just thinking about targeting certain metrics is a bad incentive mechanism outside of just overall profitability, because then the incentives change to hurt certain just arbitrary metrics that have nothing to do with anything. Or if you're like WeWork, you start making up new metrics that are not like financial
Pro
metrics at all.
forma,
Like,
pro
yeah,
forma.
it's like, oh, well, this is actually earnings after 10 other things and then adjusted for like growth. And it basically, you're not profitable. So you're going to make up a new metric that sounds really good that you can kind of talk to. And now it's all about growth and user growth rates and stuff like that, rather than does the company actually make any money? And I really hope that that kind of nonsense goes away, because I think we read like Stockmaster 2000 when he was talking about the WeWork
I miss that guy.
IPO, and just like he's like, these metrics are just bullshit. In other words, like, you just don't make any money and you have to make something up in order to try to trick people into buying it. I'm hoping a lot of this stuff goes away after the next kind of recession happens, whenever it does. Like, I don't want to see people get scammed out of this again. Yeah, he changed his name to Stockmaster 2001. I'm sure he got banned or something.
Doing what?
I don't know, just being Stockmaster
He
2000 if
didn't
I
do
had to
anything
guess.
wrong. He was what I lived for. Like he disappeared like months ago.
Yeah, yeah.
JT.
I mean,
He's
did you not see
lost.
the Stockmaster 2001 on there when you typed it in?
Yeah, but nothing came up.
Oh, I see. I see. Yeah. Well, I guess
Whereas
that's sorry, Uncle Jay.
account suspended.
Yeah, dude. He keeps
No.
getting
How
suspended.
did you get suspended?
I don't know. I didn't follow what was going on, so I'm sure he was just being good old Uncle Jay and
I
getting pissing people on, pissing people off.
I guess that's interesting. He was the best. I lived for that.
Yeah.
Oh man, that's yeah. What was the Uber had a metric, right, where they, I think this before they went public, where they had some metric that made them profitable. It was some weird metric.
I forget what it was. I know that they
Do you
talk
remember
a
that
lot
though?
about. I
They had some
remember
weird ass
talking
metric.
about
They're
it. I
like,
don't remember what the metric was.
it was some weird. I can't remember what it was, but it was like, we are profitable if you exclude this, and it was some blatant thing. And it was like,
I think maybe it had something to do with like the driver incentives.
yeah, it might have been
I'm not
driver
sure, but
pay.
like,
It might have
because
been
they
excluding
because they
something.
do have like a driver incentives that are, it's an additional cost to them to like incentivize people to go out and drive and pick up. So yeah, the thing that makes me skeptical, just as, and I don't want to knock ride sharing in general. Clearly,
It
it's,
works in Europe. It's profitable. I think it's
yeah, like,
Electron. Is that what it is?
yeah, I'm not 100% sure, but like, clearly, the being able to get a taxi or a ride by using your cell phone that can pick you up anywhere it's a fantastic service, absolutely necessary. The real question is how does that work? How is it profitable? If it's not profitable, it's not going to last. And maybe it's really not profitable until we have full self-driving, which was apparently right around the corner. Now it doesn't look like that's the
Dude,
case. Like,
they keep saying it is, and it's not.
exactly. And
Keep
that's where I don't wonder, like, is ride sharing a fantastic business model only after whatever the case may be, only after self-driving, only after the like centralized coordinator, call it the Uber, the Lyft, the whoever, do they need to decrease their cut of the ride in order for it to actually be profitable? Is it regulatory issues that make it so costly to do? I mean, there's a lot that goes into it, that there's a reason why all the ride sharing companies, at least from a US standpoint, are burning cash very quickly, or they keep diversifying into other business models that kind of piggyback on top of ride sharing. So that's your Uber Eats, that's your like the scooter stuff, like just so much
bird.
additional. It's like it when I see diversification from a company, that just means that you're not really maximizing what your true business model is, and you're just not profitable doing that. So you have to jump into other stuff to see if it takes off. Like Uber was really hoping that the scooters would take off, and boom, all of a sudden that would help subsidize their main business. And the same thing with Uber Eats. But the problem with Uber Eats is all of a sudden buying a sandwich just gets super fucking expensive.
It's stupid. It's
So
ridiculous. You pay so much for any of those services. You like look at it and you're like, why wouldn't I just go there and get the food? You're like,
yeah,
by time you
I understand why you use it. And, there's been times where I've used it where I just really did not feel like going to pick up food. And very rarely do I go out to eat or do that kind of stuff. But I get it. You're tired. You want to grab Uber Eats. Super convenient. The problem is you're paying
sedentary
double for whatever.
lifestyle.
Yeah. Yeah. The problem is you're paying double for your food, almost, depending upon what you're ordering. It really does add up. And, those kinds of business models just don't last. I consider Uber Eats or whatever their competitors are to be, that's like a luxury good, right? It's not, it's a luxury service, and that totally goes away when people are not spending money on luxury goods or times are tough.
Times are tough. That can happen.
Yeah. So I mean, I feel like we're getting towards those times are tough moments. Retail
Yeah.
spending seems like it's down. I mean, even like I personally haven't upgraded cell phones in 2 years, and I used to love getting a new cell phone every year, or getting gadgets. Like I stopped ordering stuff from Amazon, and it might just be because now I'm a Bitcoiner and my time preference has shifted, and I'm not spending frivolously or having Amazon packages delivered every week with stupid stuff to buy. So, I might be unique in this case from being a frugal Bitcoiner, but I kind of have the feeling that is starting to trend in for maybe your average person.
Yeah, I think things are slowing down. There's no way around it. I think people think the US can somehow survive a global phenomenon, and it's just inevitable. And okay, so if they keep printing, which they've done in Europe and Japan, there's nothing economic positive wise happens. Sure, it keeps assets afloat and you get negative rates, but nothing good is happening. Like the Bank of Japan owns over 50% of the Nikkei 225, which for those that don't know is the major Japanese index. It's insane. It's sheer insanity what's going on. The Swiss National Bank is buying U.S. equities. They print money. They buy U.S. equities. If you don't see the issue with that, then I can't help you.
Right. No, I know. You almost, and you really nailed it. But it's such a glaring sign of kind of the issues with the current monetary system. You have to remember we went for 5,000 years of having a free market money chosen by everyone on the planet voluntarily. Everybody chose gold, and nobody coordinated to choose gold. And now, just within the last 50 or 100 years, you have this fiat kind of monetary system, and all of the sudden now it took 50 100 years, and now we're seeing negative rates, right? And that's the first time in recorded human history that interest rates are negative. And the only reason that they're negative is because a group of 12 people sitting in a room said, okay, rates are negative now. And that's it. The free market's not choosing that at all.
Well, guess what? People still pay stupid amounts on credit cards and for mortgages and for auto loans and for everything else.
Right,
But
right.
very special people get paid to take loans now. But you have to have a lot of
It's,
money to do it.
oh man, like when you put it that way and you think about it, there's just a total
People are
different set
getting
of rules
it's a
for,
completely different
yeah,
set of rules.
yeah. And you know what? With that being said, that's why I Bitcoin personally, because the last 2 years down this rabbit hole, I've learned that there are a different set of rules, and the only way that I've personally found to play defense is to just opt out of that system. Right? I still have my corporate job. I still pay into my 401k. I still save a ton of my fiat money for a rainy day because I know I'm going to need it in the future. But at the end of the day, if I want to choose to opt out of that system for a certain percentage of my wealth, I can now do that. There is an option for me. Whether I'm right or wrong is not necessarily the case, but the as you always say, right, like the cat's out of the bag. Like there is now this kind of parallel financial system or option, if you will, to kind of voluntarily adopt a free market money. And maybe it becomes money, or maybe it doesn't, but at least there's an option for people who have woken up from the matrix and can choose to do that.
Yeah, it's as you said, you get a chance to opt out or do something different, um, because as I was saying, it's just like it's. I was going to say that earlier. There's a George Carlin quote, and I don't know if I'm going to say it perfectly, but it basically goes, "It's one big club, and you're not in it," and
Right.
that's exactly what's going on. Like, so if you're a certain company or a certain person, you can get a loan. You can get paid to take a couple $1 million loan or whatever the size of that loan is. Everyone else, though, if you get credit cards, if I said mortgage, auto loan, you name it, you're paying money. What? Why don't, why is so, but I think we're seeing it all played out, and Paranoid Bull, who we both follow, I think on Twitter, states it perfectly. We're seeing it being played out globally right now, with all these riots and protests, whether we're looking at Iran, Hong Kong, France, um, Denmark,
Chile.
Spain, Chile, Venezuela. I mean, we can go on forever. They've completely broken everything, and I think the end game is pretty bad. I think
Right.
they've really done it this time.
Yeah, they've really, and this is, I think we talked about this on another episode. What comes next? Just like in 1971, you had to go off of the gold standard, right? And that was after Executive Order 6102 that forced everyone to kind of sell their gold back to the U.S. government, or else you go to prison for a decade, or whatever the case may be. So, both of those things happened, and you need to remember that that was a default on gold, right? There was not enough gold to pay everyone back for the gold that they were asking for back. Um, and you needed to switch to a new monetary standard. And we touched on this a few episodes ago about how China is really pushing this blockchain narrative. And don't get me wrong, if you ever see the yuan have a default situation, mark my words, you're going to see the state-backed cryptocurrency is kind of um, that next kind of monetary system that you have to switch to,
They're just
right?
gonna jump
Because you
tracks.
have,
That's all they're gonna
yeah,
do.
you just jump tracks and then
Oh,
you
no big
reset.
deal. Ah,
No big deal. Boom. You like it's like thinking about it, I can kind of see it coming, and when you just,
oh.
I don't know.
Oh, we're just changing currencies. No big deal. No one looked. No one bat an eye. Just
Yeah, like
like it's
we've never
gonna.
had to live through a repeg before, and people have, dude. Like
Yeah.
people have, my in-laws have lived through a repeg of their currency
Jesus Christ.
multiple times.
That's
And like,
brutal.
when you live in the States, like and you're under 50, you haven't lived through a repeg, or having your assets seized, or whatever. It wouldn't even cross your mind that it's possible, but it is, and it happens more often than you think. So that when you say like, oh, that can't happen here, it most certainly can, and don't think that it can't, because I think that's a good way to get wrecked if you just assume that can't happen to you.
Yeah. I think one of the I don't know if I've mentioned this before, but one of the biggest scams of the Executive Order 6102, which banned the hoarding of gold, bullion, jewelry, coins, etc., certificates. The biggest scam was you had to turn it in. I think it was May 1st, and it was exchanged for every troy ounce you got $20.67. And then when they reopened, when they like repegged gold, and I believe it was January of 34, so all of like 7 months later, 8 months later max, it got repegged at $35 an ounce. Now, that's only a 75% gain, but 75% roughly on billions of dollars of gold in 1933 money, if not more, is a lot.
Right, like you crushed it.
You just destroyed it. Oh wow, we just doubled our whatever,
Yeah. It's just when you look back on history, it's so obvious that
That's
one, this has happened
police state.
before, and two, there's a reason that you don't learn these things in school. Because if you did, you'd be like, well, why the fuck are we using dollars as money? Like, this doesn't make any sense.
Why do we use these things? What?
Right. You question too much, and there's nothing conspiratorial about it. It's just you don't learn anything about money in school. I went through the public school system. I know very well that I didn't learn shit about money while I was in school. It's certainly not a coincidence that they just forgot to leave that out. It's the most important thing humans have ever invented. That third good that you can use to trade, right? It's 50% of every single voluntary transaction that you do. It is not a surprise that you don't learn too much about it.
Oh yeah, no, it literally means everything in the current world we live in. And it is absolutely insane that not insane. There's a reason they do it. If people don't know about money and how it works and interest rates, etc., and just give them a job, they'll be content.
Right.
So it's just that simple. When you break it down, and here again, this act was completely egregious and completely against everything this country was founded on.
Yeah, it's
literally
it's totally unconstitutional. It's horrific.
Oh, it is horrific. That whole presidency, and people can argue me and FDR, but that whole presidency took away so many rights. Yeah, obviously we've continued to go farther down that path since. But
yeah, no, you know what? With that being said, I think that's probably a good way to wrap it up. Like, do your due diligence. Study your history, read the Bitcoin Standard also. If we haven't recommended that before, we'll certainly take a second to recommend it now, because having a good understanding of monetary history and monetary economics will give you the very least a baseline foundation to decide what you're going to do next, right?
I think
we talk about that all the time. Like we're both guessing too and speculating, but we've done enough homework to know that something's going on here.
Yeah, so, the Fed ain't doing these repos for no reason. Right. All I was gonna say is, as you were saying with the Bitcoin Standard, you don't even have. There's only one chapter focused on Bitcoin and crypto. It's the first 12 chapters all about money, properties of money, history, and that is so important to understand the whole inflation, and it really explains how we got to the 21st century. The end of the 19th century into the 20th century really well, and how we are where we are today in 2019, almost 2020. I think it's very important. A lot of people don't understand history very well. I think a lot of public schools in the U.S. especially, and I don't mean to contain this podcast down, but I think this is pretty important. A lot of kids don't learn shit about history. Obviously, you learn about founding fathers, etc., and you learn about Abe Lincoln, and you but then you get to the World War I era, you gloss over that. There's nothing much about that. 1920s, 30s, You don't learn much, you learn about the Great Depression, but you don't learn about things like the Executive Order 6102. And then World War II is a very, you just got Japan and Germany, and they don't talk about much, And then again, you learn about civil rights, but you don't learn about real things that happen that really shape where we are. You don't learn about the creation of the Federal Reserve. You don't learn about a lot of things, and I think a lot of people miss out in history and not understanding why those things happened.
No, very well said. Very well said.
Well, on that note, we'll end episode 56 now.
Yeah, this was 56, man. Well, all right. Don't forget to like and subscribe to the YouTube channel. Leave us a review on Apple Podcasts; those really help. And follow us on Spotify. Send us a DM. Let us know what you want us to talk about, and keep stacking sats. And be careful out there. Peace.
Peace.